Welcome to FX Street, Currency in Play. I'm joined by Matt Brown, market commentator from Core London. Morning to you, young Matt.
Good morning.
Right, let's kick off with our first slide in the segment. Top trends, the headlines. The Great British Pound against US dollar. Yield differential still favours the pound. The Great British Pound against the yen jumps to a fresh year-to-date highs in post-Bank of Japan trading action. And finally, the Fed still expected to hike 3 times in 2017, according to UOB. Markets extraordinary. You know, in terms of record highs, we're talking about taking people off the dance floor in our language. Are you surprised?
Surprised at the height of the equity market? No, fundamentals are good and strong in the US and Europe and even Asia as well. So I'm not surprised to see kind of the S&P reaching record highs. With regards to currencies, look, the dollar's been weak. Fed came out yesterday. It was pretty much as expected. Obviously, no rate hike. Odds on, we'll probably see a rate hike in December.
Yep.
I think market's pricing in about a 65% chance of that. But that's against the low inflation environment in the US. So,
where's inflation gone? It's
Exactly.
different this time.
Indeed.
Those dreaded words.
Very much different. Look, and the Fed's looking to unwind its balance sheet slowly, though. It's not an aggressive move. They're not going to reinvest maturing bonds. Look, it's 4.5 trillion is the bonds they have on their balance sheet. So that's a huge amount, and it's going to take a lot of time to unwind that. We've seen the dollar push higher yesterday on the back of it. No surprises there. But all eyes, obviously, to December. I don't think we'll see anything happen in November from the Fed. It really is December. But next year as well, we may see 3 rate hikes again next year. So
2 Fed meetings for the rest of the year. We've seen an Elliott Wave technician on a different show suggest that Elliott Wave is suggesting a bottom on the dollar index, which would be very interesting on the technicals. Now, talking of the technicals, let's go and have a look at a few charts. The Euro US dollar, very simple Japanese candlestick, daily chart with a moving average. Seems to be a bit of congestion around this level. We've had people calling this up all year. Any views at this point?
I think it's pausing for breath now. And
Yeah.
we're going to see, obviously, the Fed have announced, let's see what Draghi can do with the ECB. But it was a steady and strong move up from the euro. So we're in that kind of consolidation zone now. And deciding where it goes from here is tricky. I mean, obviously, the dollar index, when you look at the euro, is 50% of the dollar index. And if you're looking at the dollar index now, pushing back higher potentially, then
you'd be a seller for choice.
Yeah,
at least you know where your stop losses on that.
Exactly, and there may be positioning going into the year end. Obviously, we're in September now, but this trade may start to unwind a little bit.
Understood. Let's have a look at dollar yen. An extraordinary move off those lows. Where does this run out? I guess you would use a Fibonacci retracement on your charts if you're sort of a technician. But it looks onward and upward here, doesn't it?
Well, look, the trend does seem to be to the downside, and this seems like a small blip. Look, lots going on. It's the risk off, or sorry, the risk on trade. So the yen obviously weakening on that, and obviously the Fed yesterday. But look, it's still stuck in that range, and potentially we could see some resistance up at these levels and back down to this key 110 anchor and handle that has been the case for this currency pair of late.
I'm pleased I'm not trading that right now. Let's move on to cable. Great British Pound against US dollar. Again, a decent move off the lows. Got the technical analysts on the show. Absolutely got it wrong.
Yeah, so, and a lot of big banks as well were calling it down there 120, and this move, aggressive move up to kind of the 135. Obviously, it's consolidated on the back of the Fed yesterday. So we're at the crossroads around the 135 level. If we see a rate hike potentially from the Bank of England, but the thing is, looking at this, it looks priced in. Credit Suisse are saying that there could be a potential rate hike in November of this year, but they think the Bank of England may have got it wrong and think there's too much slack in the economy. This would be the first rate hike in 10 years. If they do hike this side of in this year,
I think it'd be a shock to the system.
Potentially a shock to the system, and we probably won't see another hike for another 6 months. So look, I think a hike is priced in. I think it's priced to disappoint, and cable could start to trickle back down.
Okay, let's talk about something that's a little bit weak at the moment. Gold. Now, again, the Elliott Wave. I'm not sure that I believe in Elliott Wave analysis, but we've had a guest on another show suggesting we pull back to this sort of round number area, and it's worked a treat.
Yeah, dipping below the 1300 again. Look, we're talking about the Fed, and the reason, obviously, this is non-yield bearing, and if we see interest rate hikes, then obviously that's negative for gold. But it's also the risk-on trade as well. I mean, North Korea has kind of dissipated for the meantime. It's International Peace Day today, so I don't expect anything to come from Trump and Kim Jong-un. But gold, it's coming out of favour. But this now could be an opportunity to get in if you want to add gold to your portfolio. Below this 1300 level is a key entry point.
Understood. Let's wrap up with the economic calendar today. In terms of the US, we've got a weekly jobless claims, Philadelphia Fed manufacturing, housing price index, and in Europe we've got Mr. Draghi speaking. Final thoughts?
Digesting the Fed, I think, is key now. People are going to look, it's a chance now to look at your positions, decide how you want to position yourself for the next coming weeks and certainly for the coming months until the end of the year. I think the moves have happened on the back of the Fed. They're clear to see. I think the dollar index actually may give back some of its uptick that we saw last night.
We shall see. Matt, thank you very much indeed.